Hi traders, welcome to this video. Today I want to talk about trading pullbacks. A lot of you asked me to do this video and I was a little bit hesitating about that because I trade 90% breakout trades. And I want to explain why I trade so many breakout trades also in this video and why I don't trade so many pullback trades. But yeah, every stock sooner or later pulls back. And if you missed a breakout, this can give you a good entry point into a new, young and fresh trend. But before we come to a lot of examples, I want to show you we have to find a definition. What is a pullback? What is a consolidation? And what is a correction? And the problem is that there is not a 100% clear definition for that. Every trader has her or his own definition of a pullback. And for me, a pullback is always a little correction, a small correction over 1 or 2 days, but it also can last 1 or 2 weeks, and it is always in the direction of a moving average. And I personally use the 21 and 65 moving average. And here in the chart from Trade Desk, from TTD, we see two types of pullbacks. And the first one is this pullback here. And this is nothing else as a small counter trend in the general uptrend. So you can see here one very strong breakout, and then the price pulls back here into the EMA 21 and then reverses here. And another type of pullback you can see here, also a very strong up move, and then the price pulls back a little bit and then continue the uptrend here. And that situation here after this very nice gap up is not in the direction of the 21. It's more a pullback to the EMA 8. But I personally don't trade pullbacks to the EMA 8 because a lot of them failed, and you need a lot of power in the stock, a lot of buying power, that an EMA pullback is very successful. I personally like to trade more pullbacks to the EMA 21. But we will see that in a couple of minutes when we go through the examples here. So a pullback for me always happened after a strong up move. Then we see some type of correction. It can last 1 or 2 days. It can last 1 or 2 weeks. That really depends on the up move before, and it's not 100% defined. So it's more based on experience and on the chart itself. And what's also important for me is that a pullback should be in the upper half of the uptrend. You can see here this very strong up move, and then you can see that the correction or the pullback does not go to the lows of this previous up move here. And this is the same thing here. It only pulls back or above the upper half of this previous up move. And this is important because very deep pullbacks are not very successful because it takes a lot of power to bring the price up to new highs. And another thing you must have in mind is pullbacks should always should find support at a support level. And the support level could be or can be, for example, a previous breakout level. It can be a moving average, like in that case here, so moving average 21. It could be here, for example, the low of the gap. So it can be a moving average like the EMA 8 or something, but it should always pullback to a clear pullback level. And you must always have in mind that this is also very discretionary, because every trader has an own definition of pullback levels. And this is what makes it so difficult with pullbacks. You need to test a pullback strategy, and you must have an own definition for your pullbacks which are working. And with breakout trades, it's much easier, because you always have a very clear level where the price has to break out. And that's a big difference between pullbacks and breakout trades here. Okay, so now we know what a pullback is. Let's come to the second thing, and this is a consolidation. And a consolidation is always, for me, it's always that the price is going sideways over multiple days or multiple weeks. And you can see this here is a long base or a longer consolidation, but you will also find smaller consolidations in the base itself. And the problem is that every consolidation, or the most consolidations, started with a pullback. If we now, for example, see this one here, and we go through it bar by bar, you can see that now here the price pulls back, then try to go up again, consolidating around the moving average 21, then goes higher, then pulls back a second time, and then the previous pullback morphs into a consolidation. It tries to break out, then it pulls back again, then it goes sideways for a lot of time, and then we see a deeper pullback or a correction. And this is very typical for a consolidation behavior. And this is another problem with pullbacks, because a pullback is always a starting point for consolidations and corrections. And you must have a very strict risk management if you trade pullbacks, so that you get out of the trade as soon as you see that the trade or the pullback morphs into a consolidation or into a correction. So very strict risk management regarding stop loss, and also time stops are important if you want to trade pullbacks. And the last definition we need is what is a correction? And a correction for me is not a pullback. It's really a downtrend over multiple weeks or even months. And you can see that here the price pulls back, then reverses, and then you see another down leg. And you can see here we have a lower low and a lower high, and in that definition it's a downtrend. And then the trade or the stock bottomed here, and then start another uptrend. But this type of correction is much deeper and takes longer time. And what looks like a correction here in the daily chart looks like a pullback in the weekly chart. So if we now switch, for example, to the weekly chart, you can see that also these longer corrections here are nothing else as pullbacks, for example. And if you take the monthly chart, it also looks much different. But in this video, we want to concentrate on the daily chart. And it's the same thing here. If we now, for example, hide the future bars and go through it bar by bar, you can see that also from the high, you can see a pullback to the EMA 65. Maybe now you see, you say, okay, wow, this is an attractive pullback. I want to buy it. Then you can see that you can see another retest of the EMA 65 here. Then the price undercutted the EMA 65. This is a definition, or this is definitely a case where you want to be very, very cautious. So this isn't a pullback anymore, it's the start of a new correction. And then you can see that the price corrected much deeper. Then you can see a reversal here, and now maybe you say, oh wow, another pullback, and then the stock starts to correct much deeper with a general market. And so this is a big problem of pullbacks, that pullbacks always morphs into, or can morph into, consolidation and into corrections. So the situation when you look at a pullback is much more difficult and not so clear as for breakout trades. Breakout trades are always a 1 or 0 situation for me. And if we now look, for example, at, let's look at a failed breakout. You can see that here is a consolidation, then the price tries to break out and then failed and fell back here into this consolidation phase. And this is a 1 or 0 situation for me. 1, the breakout is successful and goes up, and 0, the breakout is not successful. And every situation or every breakout which falls below the breakout line, this upper resistance line, is a 0 situation for me. So the breakout is failed. And it's much easier to make decisions on that. But breakouts fail very often. And also pullbacks fail, but I personally think that breakouts fail more often. But that's not a problem, because a few big trends pay for all the small losses. Okay, so now I explained you a little bit more theory, and let's look a little bit into the charts. So we looked here at TDD. So now let's look at EXPI or EXPI, and here you can see a situation where we do not have any future bars. So we don't know what will happen next. And you know, the stock market is not 100% predictable, and we do not need prediction to make successful trades. And now you can see here a very nice situation. EXPI is pulling back into the EMA 21 here. You can see it's on the support level, or very close to the support level of the previous highs here. And now this could be a potential pullback situation. But you have a problem, and the problem is you never know what will happen next. And what can happen next is, of course, the price can go up and rally to new highs. But it also could be that the price will now start another consolidation. And I really don't like dead capital. I personally don't want to have my capital in a trade which goes sideways for weeks or even months after I bought it. When I have a profit cushion, that's not a problem. Then I'm much more patient. But when I buy into a trade, I want to see profits very, very quickly, because it's the best confirmation that the trade will be successful. And the third option, it could be that we will see a deeper correction. And this is the speculation what we are doing here. So if you want to buy this pullback here, you have to be prepared for all the 3 scenarios. The first one, so a trend which is breaking out to new highs and go higher. This is this is what you want to see here. So you must be prepared to that, so that you buy into a trade and then maybe move your stop loss up so that your trade is risk-free. And you also want to be prepared for the second scenario, so the price goes sideways for weeks and even months, so that you do not hold on to the trade, so you exit the trade and wait for another situation. That's what I described with a pullback morphs into a consolidation. And of course, you want to be prepared for the third scenario, and this is a correction. And in that situation, you want to be out of the trade. But you never know what will happen next, so you must be prepared for all the scenarios. And if we now look at CHWY, for example, this is exactly the same situation that maybe depends a little bit on the market right now. So you can see pullback to the EMA 21 looks very attractive here, and you must, if you want to buy into that, you must be prepared for all the three scenarios. And yeah. And now if we look at, for example, Moderna here, you can see that a previous pullback to the EMA 21 failed. And now you see that it pulled back to the EMA 65 here. And also a previous pullback level or previous support level here from the multi-weeks base here. So also a possible attractive pullback scenario here in Moderna. And you also have the same situation here. You must be prepared for all three scenarios if you want to buy them. And if we now look into the pullback scenarios, you maybe ask, when I personally buy into pullbacks. And I want to show you this with the example from Pinduoduo here. Pinduoduo is a trade where I personally have a position right now. But I buy it or bought it as a breakout trade. So I bought it on a breakout here. And you see a wonderful pullback to this previous breakout level. And this is a possible entry. And let's assume I would not have taken this breakout trade, but buy into this pullback. And you can see this very nice pullback to the EMA 21. It happened directly after the breakout. So that means this is the first breakout. And this is important. I personally buy only the first or maybe second breakout. But I don't buy the third or fourth breakout. We will come to this in a minute. But let's assume I buy this first breakout because I missed the breakout, the original breakout. And what I want to see is, I want to see either low volume or high volume on the pullback. And you can see we have here 2 days of above average volume. And very important, on the day of the pullback here, you can see we have also higher volume, but the price closed in the upper half of the range, of the daily range. And this is important because you want to see a reversal. You want to see that the price really reversed from the lows and closed, very, very close to the highs. And the best situation is when also the bar is not red here in that example, or purple. No, you want to see that it's green or blue in my chart here. So you want to see that the price reversed from the lows and closed in the green, so that really the buyers were able to push the price back from the lows to the highs. And when I see this situation, I never, or really almost never buy, so never say never, but I never buy into this bar directly. I always buy at the next day. And I do that mostly with market orders or stop orders when the price crosses above the high of the pullback day. And why I'm doing that? Well, because I want to avoid that on the next day the price moves lower. I want to buy into the direction I want to see. I want to buy into the direction of the trend. I do not want to buy as cheap as possible. I want to buy right, This is important. I want to buy when the price is reversing from the lows and is running into the trend direction. So that's why I buy above the highs of the candle here. And yeah, so to sum it up here a little bit, so you want to see a reversal from a clear support level. You want to see good volume, so stronger volume, and you want to buy above the high of the reversal day. And in Pinduoduo, I bought here, or I added to my original position on that bar. And this is something I do also rarely, but more often as buying breakouts, that I add to an existing position after it pulled back from, for example, the EMA 21 here on good volume on that day, so on above average volume. And you see a very strong bar at that day. You know that the price had a failed breakout, touched the EMA 21, then reversed very, very strong, so above the highs here. And then I buy directly into the close. So a few minutes, 5 or 10 minutes before the close, I buy a position or add it to my position here in that example. But I want to also give you another example. This is a few days ago. That was really a breakout very early in the 2020 bull market I missed. And that was FVRR here. And you can see, now that was not 100% precise here. Well, let's take that one. And you can see that here FVRR pulled back very closely to the level, to the previous breakout level here on good volume at the day. And that was a situation when I bought here into a pullback. And I also think that I added to that stock also here on that situation. And and it's really the same, you know. I buy always above this candle or above this bar on the next day when the price is going up, not when the price is going down. This is important. I also do not buy with limit orders because, again, I don't want to buy cheap. I want to buy right. I want to see that the price is going into my preferred direction. I don't want to see that I buy as cheap as possible. And maybe you also ask where I place my stop loss in that case here. So let's remove the drawings. Below the candle. Because as I said and as I showed you in the TTD example from Trade Desk, when the price goes lower, so goes below the low of this bar, that is a start of a deeper pullback or a correction for me. And in that case, the trade is not valid anymore. And I want to be out. And of course, I have to make sure that the pullback here is not deeper, or the distance between the highs and the lows is not more than 7%. So my maximum stop loss. If that's the case, I have to place my stop loss not below the low, but maybe below, maybe 7% away from my entry point. So, okay, and now you saw how I buy into pullbacks, and now I want to show you another thing, and that is avoid late stage pullbacks. And this is important, and I want to show you that also here on this FVRR example. You can see that FVRR had a very nice rally with a lot of pullbacks. You can see always the price is pulling back into the EMA 21 here over long time here, and then you see deeper corrections into the EMA 65 and so on and so on. The problem is that the later the trend, the less power has a trend, because a lot of people already bought and there are not enough buyers or not enough buying power anymore. And that's a case why a lot of late stage pullbacks, so if we now look at here, for example, reversed, then here, for example, that's a more deep pullback, had a failed breakout and reversed, and so on and so on. Here you can see that same thing over and over again. And this is why I personally always make sure that I buy the first or maybe second pullback after a breakout of a sound trading base. I made videos about trading bases, so look into my YouTube channel for that. But if you now look again at this trading base here, this is the first pullback and this is maybe the second one, but it also failed here. So you can maybe try the third one here, but that's the absolute maximum. I don't buy into the fourth or fifth or sixth pullback. When I do that, I want to see a new trading base. I want to see a new trading base, and that resets the number for me so that I'm able to buy another pullback here. But that's very rare. So I always try to buy the first or second pullback after the rally started. Okay, so let's go through some more examples here. Pinduoduo we already saw. I want to also show you Plug Power, because Plug Power had a very nice first pullback situation here after a big base. So you can see here is the base with a nice consolidation. Here is a breakout out of the base. That's a cheater breakout, so it's not a new all-time high or a 52-week high here. That's a breakout from a lower base here. And then you can see the price pulls back here into the EMA 21, and the pullback was on lower volume. You know, you can see the first one was a really shakeout, so gap down and correction into the EMA 21 here. Then you see some candles here on higher volume, and maybe you get triggered on that candle here. And then you can see a very nice volume decrease, and the candles or the bars are getting smaller and smaller and smaller. So a volatility contraction happened here, and then it exploded to the upside here and presented another pullbacks. So, but if you want, for example, buy into this situation, or if you had bought into this situation, the best pullback was here above that candle. So that you get triggered on June the 16th, and then you can see that you had to hold on just a couple of days, and then the price explodes to the upside here. But it is definitely, or was definitely not a problem, for example, to buy here at that situation on low volume. So, and when it's breakout, that always depends a little bit on the situation, and that makes it highly discretionary and highly subjective, because you have to interpret what the chart is doing here. So if you have this big down day here, or this big pullback, of course that's a high volume situation, because it's a shakeout. A lot of people get shaken out of their positions here and sell. And then you can see that the price reversed here from the lows. And then you want to see a little bit higher volume on those days. And then you, when the bars are getting smaller and smaller and smaller, that's a situation when you see, or when you want to see, lower volume. So it's a lot of based on experience, as it's typical for chart reading. So let's go through some other stocks here. JKS, Jinko Solar. I highlighted that in the last, in one of the last issues from our free newsletter. So you can see here multiple pullbacks. All the pullbacks failed. So no of the pullbacks was able to start a new rally here. So the stock needed much more time to consolidate. You can see that it formed a new base here, and now it's pulling back into the EMA 21. So, and that's the situation I personally monitor a little bit closer, because you can see the price try to break out here and then pulled back now into the EMA 21, and maybe is able to rally again and then break out. I personally don't buy a breakout, buy a pullback here, especially not when it's in the base itself. I wait until the stock is able to contract its volatility, so volatility contraction, and then I maybe buy into a new breakout. So, but I want to also show you another thing here, and this is that a lot of stocks, especially the super stocks, they do not pull back very often. This is something I wrote about on Twitter, and a lot of people then ask me, no, more than 50%, more than 50% of the stocks are pulling back to their previous breakout levels, etc. That's true. That's okay, but they are not the super stocks. You know, when a stock is pulling back, that's always weakness, because people are willing to sell. It's not that people are willing to buy so quickly. No. They sell into the strength, and that's a reason for a pullback. And if you see, for example, here, Jinko Solar, after this breakout from this lower base here, you can see how the stock exploded to the upside and rallied. I'm not sure how many percentage that was here. So more than 200%, and there was no pullback. And when you bought the first pullback here, it was too late, because the stock already had all this power, or after the breakout, the stock lost all this buying power in this monster up run here, and then there were no buyers left to buy the pullback here, and that leads to this consolidation. And there are a lot of other stocks which are where the breakouts did not pull back. You know, if we look, for example, back to Fiverr here in the first up move. So let's look here into the first up move. It goes very straight upward. Of course, you can buy into this one here, so into this small one, but you have to recognize that, and you have to you need the mindset to press the buy button here. But you can see that if you buy, for example, this one here, it's too late. The most of the rally is already over. So, and then another base sets up here, and then you can buy late stage bases or late stage breakouts. And this is why you have to buy very, very early in a trend. I also want to show you another example, a stock where I personally have a position right now, and this is Farfetch. Here you can see there's almost no pullback in this trend. So very, very small pullbacks to the EMA 8 here, and that's all, and that's everything. So, and these are really, really super winners, and you can only catch them if you buy into the trend. So if you buy the press button when the trade is already up, and when you add to your position when the trade is already exploding to the upside. That's the only possibility to buy into those super winners, because those super winners are pulling back very, very rarely. Of course, they are not very often, so you do not see a super winner every day. But when you recognize them, and when you see that a lot of volume is coming into the stock, it maybe makes more sense to buy a breakout than wait for a pullback and missing the whole trade. Okay, so let's go to the last examples here I prepared. This is Snap, for example. You can see that this very nice pullback here. Also, the bars are getting smaller and smaller and smaller. So volume is decreasing. That's what I said about low volume pullbacks. That's absolutely okay when the bars are getting smaller and smaller. And this is, you know, this pullback here is more like a consolidation for me. This is not a pullback, you know, because first of all, this started as a pullback, and then it tries to break out, a failed breakout, and then it morphed from the pullback into a consolidation and then breakout. When I now also show the EMA8 here, you can see what I said about I personally don't like to buy EMA8 pullbacks, because the most stocks, especially when they had so strong up moves here, they need more time to consolidate. They need more time to shake out buyers and sellers, and they need more time to consolidate the strong gains and find new buyers which are able to bring the price higher. And that's why I personally buy mostly EMA21 breakouts here, pullbacks, and avoid the EMA8 pullback situation here. Another one, ZS. I also have a position here in that stock, and this is an example where I do not bought an EMA8 pullback. I bought this consolidation here. And the same thing, you know, same thing. You had this wonderful breakout out of a great base here. Then it pulled back to the EMA8. Then it morphed into a multi-week consolidation. And then there was no problem to buy into this breakout out of this small consolidation here. Now the price is pulling back to this breakout level. But that's what I said at the beginning. You never know. It also could be that the price is exploding to the upside and you do not get a second chance to buy to buy into the trade. So now you get a second chance because the general market, so the S&P 500 and also the other markets, they are more volatile and more weak at the moment. So you get a second chance. But if you buy very early in the market trend, you sometimes do not get a second chance, and that's why it makes sense to buy into breakouts. IIPR, I want to also show you that. That's also a personal position where I'm invested in currently. You can see a very nice pullback right now to the EMA21 here. So I bought here this breakout. So now the price is pulling back here, and this maybe gives me the possibility to add to my position, maybe on a new high, maybe on a new high of the pullback here. But also in that case, I bought into a breakout and waited patiently for a long consolidation here. PTON, Peloton, was also a super winner this year, and that was also a situation where you easily had the chance to buy into a pullback. You can see here very nice pullbacks on the way up, but I personally I think I bought here into the stock, so after a breakout, and the stock was a little bit weaker than a lot of other stocks I owned, so I sold it. I'm not 100% sure, but something like that one here on that day. And and you know, this is what I want to explain you here with that. You do not have to buy pullbacks all the time. You can also wait until the stock consolidates and then buy into a breakout trade, which maybe gives you a better opportunity because you are not you are not inside a consolidation with your capital, and you avoid dead capital in that situation. The last one I want to show you is BILI, and that was also a trade I highlighted in my free newsletter, and that was more a typical pullback situation here. So very nice base, super strong breakout. Maybe you were afraid to buy at the breakout here because it was up 22%. And then you can see here one very nice pullback in the direction of the EMA 21. That was more a pullback to the EMA 8 here. And then you had the chance either to buy the pullback or to buy into the breakout situation here a few days later, which from my personal opinion was a better situation, because it's as I said, a 1-0 situation where you very clearly see if the trade is right or not. Okay, so that was a lot of information, and I also recognize that it was a little bit maybe confusing at the one or at the one situation or another. But what you must have in mind is, I rather trade breakouts than pullbacks, because pullbacks can always morph into consolidations, into corrections, and it's much more difficult to get out in such a situation as in breakout trades, because breakout trades always have this 1-0 situation, and pullbacks are always morphing into new chart patterns, and that makes it much more difficult to get out at the right time. Then what you must have in mind is, if you want to buy a pullback, don't do it on the same day, on the pullback day. Do it on the next day when the price is moving into your direction. So you do not want to buy as cheap as possible. You want to buy right. This is important. Then either buy low volume pullbacks, so especially when the bars are getting smaller and smaller and smaller, or you want to buy on a reversal with high volume. So avoid pullbacks where you see marginal volume or something, and where you do not see a very clear and decisive reversal from the lows. So always buy pullbacks if the close is in the upper half of the day. So that's important. So you want to see that the price reversed. And my personal recommendation, only buy the first or second pullback after a base breakout. Do not buy late stage pullbacks. They will fail. So it's the same like late stage breakouts. They will always fail, or very often fail. So okay, I hope I covered the most important things. And if you have questions, please write a comment. And you can also follow me, of course, here on YouTube. If you like the video, give it a thumbs up. If you do not like it, give it a thumbs down. That's also feedback. And of course, you can subscribe to my channel here on YouTube. You can also follow me on Twitter and Facebook and Instagram, but I personally recommend to subscribe to my free newsletter. I send it out every Sunday with trading tips and 3 candidates from my personal watch list.